Hello again, fellow BeachBum traders. Thank you for joining us for part one of our weekly trading game plan for the trading week of August 28th through September 1st, where we'll talk about how we can help you make money trading in the fallout from the Jackson Hole Symposium 2023. We'll also talk about additional strategies, trade ideas for making money trading the week of August 28th through September 1st. So let's get started. So here's our Google document with our notes for part one of our weekly trading game plan for the trading week of August 28th through September 1st. We keep our notes in publicly accessible Google documents. You can find a direct link to this Google document in the description box below. Our notes contain links to bonus videos, the tools, the resources, etc. That we use for our weekly trading game plans. We store all of our notes documents for our weekly trading game plans also in a publicly accessible Google Drive folder. So you can refer back to the notes from this week, previous weeks, etc. And you can find a direct link to that Google Drive folder also in the description box below. Good morning to Ricky Kahn, Walter Lyons. Thank you for joining us in the live chat today. Hope you all had a good week and are doing well. So let's start and we'll look at the fallout from the Jackson Hole Symposium. Look at how the markets ended up on Friday. So we can see pretty clearly in these charts from each of the indices, kind of the fallout from Jerome Powell's speech at the Jackson Hole, which was about 10:05. So we see in all of the indices the negative reaction initially when Jay Powell started talking. We had downturns in all the markets, and then we had somewhat of a recovery after he finished speaking, as we'll talk about further fallout and some of the quotes that I snipped out of his speech, that there weren't any really surprises, nothing shocking, nothing really new or shocking, and then the markets recovered pretty much the rest of the day and all ended up slightly positive. So we had about 60% advancing, 35% declining, only a few new highs, 15% new highs, 84% new lows. We've now got 28% above their 50-day moving average, 71% below, and only 43% above their 200 and 56 below. So it's, the past couple weeks we've seen this turn negative where most of the stocks are now below their 50-day and their 200-day moving average, and we can see the indicator at the end of the day. All the indices kind of rolled over into the end of the day, still ending up positive, but then indicating a bearish signal. See, most of the green was in the mega cap techs. Nvidia had a profit taking in Nvidia after that huge run up after their earnings. Tesla had a bounce back as well, but generally things ended up slightly green. See some of the news. August stock market weakness. We've talked about the seasonality factor, that August tends to be slightly down, September more down. We'll talk about how markets typically perform in September, the top performing sectors and industries in September during the following week. Shrink, we got a lot of retail stores announcing shrink, causing issues. Shrink is essentially theft. Snap 3-week losing streak. We'll see in the futures chart, oil's been kind of bouncing around 80. It's got good support at 80. It's, oscillating around that 80 support level. Natural gas, again, still range bound between 250 and 3. Gold did break down below 1950, so now that 1950 level is somewhat of a resistance level, but we can see it's retesting that 1950 resistance level, and we can see all the indices futures are pointing green right now. Had a lot of volatility in the foreign currencies. We'll see the euro was weak against the dollar. The yen was weak against the dollar, so we saw a DXY. Last I saw, I think it was up in 104. Treasuries up again, up over 4%. Still somewhat inverted, but again, significantly above 4% and relatively high. Welcome, MD. Thank you for joining us as well. Look at each of the indices in detail. So again, we see SPY is bouncing off that lower trend line of its channel. It's below the moving averages right now, so those are going to provide resistance. So we're going to get this bouncing action, testing the moving averages, testing the lower trend line. As long as the lower trend line holds, that's an upwardly trending channel. But in longer term, again, it's approaching that longer term moving average on a weekly chart. Probably gonna test and bounce off of that longer term moving average on the weekly, and again that will provide some support. So again, I expect some choppiness right around that trend line for some period of time until we get some kind of positive or negative catalyst. Qs, NASDAQ, very similar, looks about the same, still got a little bit of additional room above that longer term trend line on the weekly chart. So again, I'd expect similar behavior, a lot of chop, testing that moving average. Again, it will provide support unless we get a catalyst, that causes it to break down further. Dow looks like it's, it peaked out, rolled over, and is now testing that longer term trend line. So again, that's providing some support. Again, very similar. I expect some chop, support from that trend line. Russell, very similar to the Dow, peaked up, rolled over, very close to the previous high, rolled over back down to the weekly average. It did break down below that 20-week moving average, tested the 50. So again, it's got support there. So again, I expect, a lot of chop, a lot of lateral movement, and unless we get some kind of catalyst, not much in the VIX either. The VIX did pop up a little bit, and even with the Jackson Hole, some of the economic data, some of the earnings, the futures are showing 17, but after the Jackson Hole, Jay Powell's speech, it very quickly retreated, and the last I saw it was below 60 in the actual VIX, so not a lot of fear. I think if I had to guess, I think people probably put puts on before that speech and took them off pretty quickly after the speech didn't really reveal anything new or surprising. Again, my humble opinion. Good morning, Alan Krantz. Thank you for joining us. Hope you had a good week, doing well. So let's look at the groups and the sectors from Friday for the weeks, etc. So we see on Friday, everything, slightly green, consumer cyclical, positive, energy. Earlier in the day, it was much more defensive around that Jay Powell speech, utilities, consumer defensive, and then towards the end of the day, rotation into consumer cyclical. We see for the week, Friday, it was a sector rotation back into energy. For the week, energy and defensives were negative. Technology generally had a pretty good week, but again, we saw some rotation out of technology on Friday. Again, the theme for the month, consumer cyclical and energy. The worst performers, real estate, utilities, basic materials. So we see some rotation starting back into basic materials and energy. Welcome, Ali in the Bay. Thank you for joining us. Hope you're doing well. So again, for the quarter, utilities were generally weak, energy strong, consumer cyclicals. So again, we see a slow sector rotation back into energy, consumer cyclicals, possibly basic materials. Real estate seems to be recovering as well a little bit. I think on Thursday there was a bounce in the REITs. Hopefully some of you caught that as well. So we see some energy, uranium, solar positive, oil and gas, some of the REITs, coal. Retail negative. This is showing silver and gold negative, but I think the futures were actually somewhat positive. And we'll see that bounce again in silver and gold when we get to the futures. So gold was positive for the week. Uranium's been strong. Again, recovery in the REITs. Silver's bounce. Again, department store retail very negative. Specialty retail negative. And again, the theme for the month is, energy. Uranium, again, has been strong. Oil, natural gas. And again, solar is very volatile. They rotate in and out of solar, but in general for the month, it's been very negative. Again, same theme for the quarter so far. Again, solar for the quarter is negative. Gold, again, we'll see has been rebounding. Okay, let me grab a quick drink. We'll open up the investing.com economic calendar. We'll look at the economic data from this past week. I'll also talk about my takeaways and the fallout from the Jackson Hole Symposium, and then we'll see what kind of economic data we have coming up for the following week. Okay, the main data before we get to the Jackson Hole Symposium that I took note of is on Thursday. We got jobless claims data. You can see continuing claims is slightly below expectations, but pretty much in line. Initial was below expectations. So again, all the data we've been seeing says the job market's relatively resilient. Unemployment's not dramatically increasing. So again, the Fed can, be more hawkish. And again, we'll hear in the statements from Jay Powell's speech a generally hawkish tone that they can continue to fight inflation without too much worry with the job market. Durable goods was a little bit stronger in July. Orders was weak. And then on Friday, in addition to the Jackson Hole, right about the same time, we got Michigan sentiment. We can see the 5-year inflation expectation is a little high. It's above 2%. It's at 3%. Expectations turned down a little bit, so the consumer is a little more negative in August so far than previously. And the near-term inflation expectations was above expectations. So again, the consumers expecting higher inflation, and that doesn't, bode well in terms of the Fed's success in fighting inflation from a consumer standpoint. Here's my quotes that I extracted from Jay Powell's speech at Jackson Hole. Again, I'll just go through these quickly and then interpret. So some of the things that he stated, we're prepared to raise rates further if appropriate. So again, we can expect potentially further rate hikes. We intend to hold rates at restrictive level until confident inflation is moving sustainably down to 2%. So again, higher for longer until they're pretty much sure that it's going to move down to 2%. Decide next rate moves based on data. So again, data dependency. Again, all of these things is what we were saying going into this Jackson Hole, and hopefully none of you fell into the Jackson Hole. That was our title from last week's weekly trading game plan. Don't fall into the Jackson Hole. So hopefully we set these expectations reasonably, and you were able to make money trading around the Jackson Hole Symposium. You can see 2 months of good data are only the beginning of what we need to build confidence on inflation path. So again, any single data point is not sufficient for them to change their direction. Need some further progress on non-housing services inflation. So that's a sector that they're focusing on. So as we see that economic data coming out, we want to pay attention to the non-housing services inflation. Will not change the 2% inflation target. So people talk about them having to come off of that 2% inflation target. They're saying they're not going to change it. So 2% is their goal, and they're going to hold to it. Above trend growth could warrant more Fed rate hikes. So again, if we see GDP data higher than expectation, that would warrant them to raise rates further. Lowering inflation also likely to require softer labor markets, so they're expecting unemployment to go up, somewhat. Again, their target, their goal is to get inflation back down to 2%. That's their primary goal. If that means softer labor markets, then they're willing to accept that. And then I like this quote that he said, "We're navigating by the stars under cloudy skies." So you can kind of see their view that they understand that it's difficult for them to navigate when things are cloudy, get mixed data, mixed signals, and they're trying to navigate a path down to 2%, essentially without crashing the economy, sending it into a deep recession. So those, again, are the quotes. Again, from last week, our don't fall into the Jackson Hole is pretty much as I expected. Again, none of our content should be considered financial advice. We're not financial advisors. All of our content's for education and entertainment purposes only. But again, hopefully we helped last week and said, we didn't really expect anything new. They're going to be data dependent. We expect further rate hikes, higher for longer. They're going to stick to their 2%, and they're going to focus on lowering inflation. So again, nothing new, pretty much as we expected. And that's what we got. And the tone, was interpreted as generally hawkish. So again, we expect further rate hikes. It's just a matter of when and to what degree. So I hope that all helps. So I'll quickly spin through the rest of the economic data from last week, and then we can look at what's coming up for this week. I see someone was mentioning the natural gas storage, the oil storage, etc. See existing home sales lower than expected. Again, we expect that. Nobody's really selling existing homes. However, they are buying new homes, so new home sales tend to be better than expected. So here we see the weekly oil stock was down, but it was down less than expected. And again, oil's been hovering around 8%. Mortgage rate jumped up to 7.3. Again, the 10 years now in the 4.4 area. Mortgage applications way down. So again, with the mortgage rate going up, mortgage applications go down. Permits a little better than expected. Again, new home sales doing okay. Builders are paying down that high mortgage rate, so new home sales are continuing to be strong, but existing is poor. Manufacturing, again, weak. We've seen this weakness on the front end, the manufacturing end, so slower growth. So new home sales here actually for July beat expectations. But again, that was probably before the surge in mortgage rates. Here again, we see crude oil inventory significantly down more than expected, but again, crude oil price is holding around 80. There's the start of Jackson Hole. We talked about jobless claims and durable goods. Natural gas storage. So again, there was a build, but it was less than expected. Again, the natural gas price we'll see in the futures has pretty much been range bound between 250 and 3 and bouncing back and forth through there. We talked about Michigan sentiment, and there again we see a decrease in oil rigs. So part of what's probably holding up the oil price is that the U.S. producers are reducing their rig count. And we've seen that now steadily for some period of time. So again, as they continue to do that, we'll expect, oil prices to stay about where they are, about in the 80 range, unless something changes. So let's see what we've got coming up next week. Got some bond auctions, got housing prices. Again, the Fed wants to see housing and price inflation curtailed. Okay, jolts. This is something, again, a couple meetings ago, Jay Powell mentioned the open jobs. So we'll see if that's coming more into line with the people looking for jobs. Mortgage rates. So jolts is going to be important on Tuesday. Again, mortgages, and we get core PCE. So this is one of the primary economic data points that the Fed uses, also GDP data. So Wednesday, we've got, some more data points going into the Fed's next meeting that could cause some volatility if PCE prices are higher than expected, GDP stronger than expected. Again, that may prompt the Fed to be more hawkish sooner, raise rates sooner. Home sales, and then oil, natural gas storages. And we get job cuts and jobless claims data again on Thursday. Again, important, more PCE data, personal income. So again, resilience of the consumer and spending. If spending continues high, again, that's inflationary. And then jobs data, payroll data. So Wednesday, Thursday, Friday, we've got, important economic data, probably cause some volatility, chop in the markets. And again, this may give us another set of data points that will indicate, how aggressive the Fed's going to be. Are they going to raise in September? Are they going to wait till the October-November meeting? When are we going to get further rate hikes? So, if you were looking at the Fed Watch Monitor tool, I'm sure those percentages will oscillate as we get each of those data points. So again, the next Fed meetings are September 19th and 20th, and then the end of October into early November, the 31st to 1st, and then December. So the probabilities, will swing as to when do we expect. Pretty much from the last dot plot, we expect at least another 25 basis points. It's a matter of when is that going to occur. We're going to get it in September or October, November, or later. We'll see those probabilities oscillate with that economic data coming out. So we should be slowly winding down in earnings. So we'll look at the earnings calendar in investing.com real quickly, see if anything's notable. But the notable earnings from last week was NVIDIA. NVIDIA pretty much, knocked it out of the park, beat earnings, raised their guidance significantly. Their price targets were all, jacked up. And then after, we saw some profit taking in NVIDIA. So I think we're over most of the major earnings, but we'll see if there's anybody. We had the major retailers report as well. So we'll see if we see anybody coming up. That may be significant. And if anybody in the chat knows of any earnings that are significant to you, to the BeachBum trading community, you can throw them up there. Tupperware's bankrupt. And you can go through this whole list. It looks like a lot of smaller companies. A lot of, OTCs, penny stocks, etc. Biotechs. So again, you can go through the list, but again, it looks like winding down. We've got smaller companies, biotechs, etc. So focused volatility on those. A couple banks, HP, I guess, Hewlett Packard's big, Best Buy, couple larger companies, but Box. So again, you can go through this long list. Keep an eye if there's anyone that's of particular interest to you. in investing.com, and then I'll also show you a near-term calendar in Webull in a second. Alan Krantz is asking, is NVIDIA overpriced? Yeah, they had a great quarter, etc. If you look at their PE, I'm sure it's pretty high. Again, they're doing very well. Analysts are, jack their price targets, but it is expensive, and you saw a lot of profit taking very soon after the run up after that excellent earnings. Okay. So let me grab a quick drink and we'll go look at the market screen in Webull. Okay, so this is the market screen of the online browser version of Webull. I like to use this for market analysis. As you saw, if you're not already using Webull, they're still offering up to 12 free stocks. If you open and fund an account, they're also offering 5% interest on your uninvested cash in a cash account. So again, we use Webull for market analysis, due diligence, majority of our trading. So again, if you're not already using Webull, we recommend it. And if you use our affiliate link in the description box below, you can also help support our BeachBum trading community. So again, this is the market screen in the online browser version of Webull. I like this histogram. We can see a distribution of the advancers and decliners. So we see, about a 3-to-2 advancers and decliners, but the percentage of advancement was relatively small, decline relatively small, a lot unchanged. As we've seen from several weeks on Friday, we see inflow in the NYSE and outflow out of tech. So we've seen, again, this, outflow of cash coming out of the NASDAQ, particularly on Fridays, and into the NYSE now for several weeks. Again, you can see a near-term earnings calendar here in the calendar section in Webull. You just flip to earnings. You can also see dividends and splits. And again, you can see what's coming up in the very near term. It tends to be easier to navigate than the full list in investing.com. You can see it's at after market close, before market open. So we can see who's coming up in the very near term here, and this will update throughout the day. Look at the best performing industries for the week. So again, uranium's been strong, semiconductors, primarily NVIDIA, automotive. This is VinFast, this Vietnamese company recently IPO'd and had a ridiculous market cap. Construction materials, again, new home builders doing well. REITs had a bit of a rebound. Metals and mining, kind of mixed. Consumer goods, split. Utilities, again, got a little bit of a rebound. Software and IT, pretty much unchanged. Look at the ETFs for the market. So Up on the NASDAQ, up on the Dow, so positive right now. So up on the Dow, up on the S&P, short the VIX. So again, still downward pressure on the VIX. It hasn't really held any pops lately, although again, it's still sitting just below 16. Up on the Russell, up on small caps, so all bullish signs right now. Up on Europe, we'll see the volatility in the foreign indices, Europe, the DAX, etc. Short China, so negative on China, positive on Europe right now. Self-driving EVs, industrials, uranium again strong, utilities again rebounded utilities, healthcare is positive, energy, communications, technology, basic materials, cyclicals, defensive, very strong. Real estate pretty positive. Financial services kind of split. Again, we keep seeing regional banks and banks get downgraded by credit agencies, so that's concern for the financial sector. Commodity sugar. There was news out of India that they're restricting exports of sugar. So we save big amounts in sugar. So there's one. There's cane we have in our ETF spreadsheet. Natural gas positive. Again, sugar, gas. So 3 to 7 treasuries, interest rate hedge. Swiss franc's a little stronger, euro, pound, Australia. So most of the foreign currencies are weak right now against the dollar. We'll see that in the futures in a second. I think Walter was just mentioning something about the DXY, the currency pairs in the DXY. Alan's mentioning some other news from this week. The BRICS nations had their meeting in South Africa, and they're inviting a number of new members. I know some, it's Argentina, UAE. I don't remember the others, and I didn't snip that out. But that was some other, significant news, and their discussions of using currency other than the dollar. Although most people are not too concerned. So let's look at the futures in FinViz. Yes, Egypt was another one that was added to the BRICS. Alan Krantz pointed that out. So if we look at the futures, we see this rollover. Dow hasn't quite tested the previous lows, but it's approaching that area. S&P, again, one of, I guess, somewhat of a concern or a possibility is this gap in the S&P, also in the NASDAQ, because, gaps have a tendency to want to be filled. And there's the potential, if we get some negative momentum that we might have to see a gap fill in the S&P and the NASDAQ. Right now, it's testing the previous, so it broke down below the previous low, bounced. S&P looks like it tested the low and bounced. But again, watch for a downward move, potential gap fill longer term. And again, seasonality says, September is the weakest month of the year. And again, we'll talk about that in more detail next week. See this volatility in the European stocks. They dropped, bounced. So again, pretty dramatic bounces in both the Euro stocks and the DAX. If you're day trading, there's some opportunities here. Nikkei's been kind of flat, a little less volatile. See again, the Russells, very similar, getting close to previous lows. It doesn't really have that gap as much, but And we see the VIX had a little bit of a pop and then, quickly receded. So it's broken a little bit above 18, but it tends to recede pretty quickly. Again, oil's hovering, oscillating around that support line at 80. Range bound right now between 80 and 85. Natural gas, again, range bound between 250 and 3. Broke down a little bit below 250, I believe, but then regained. And this is the futures. So see the roll forward in the futures now showing, it up above 250. So again, I expect, similar behavior, bouncing between 250 and 3 until we get any kind of catalyst. Again, we saw a bounce in gold, went down to that 1920, broke down below 1950. So now it's, kind of testing that 1950 as a resistance point. Same way with silver, dramatic bounce. So if you caught these bounces in silver and gold, we talked about these last week as a potential opportunity for short-term trades. We can look at some ETFs that we prefer to short-term trade gold. My preference is GDXU for gold, AGQ for silver. But again, we have several others. Those are the longs. Again, opportunities, short-term opportunities in gold and silver that we talked about again last week. Sugar somewhere. Again, we talked about that restriction on India's exports of sugar. Wheat kind of bounced and rolled over a little bit. Corn's, pretty flat, pretty low, pretty flat. Oh, there's the bounce in sugar. Again, not near the high yet. And then we saw, treasuries declined, had a bounce, and then again, yields were a little bit on the upside. So again, this, hit a multi-year low in price, high in yield. They're up in the 4.4s right now. So again, we potentially could get another lower low. We talked about, the seasonality trend in the treasuries and how we're looking to play that eventual bottom. We're going to get another rate hike sometime, so yields will go up, prices down. Again, we talked about the strengthening of the dollar, primarily due to the weakening of the euro and the yen. So the DXY is up over 104. Normally, that would have put more pressure on your dollar-denominated commodities like gold, silver, oil, etc. And it really didn't seem to have much of an effect. It had a minor effect. I saw silver gold decline a little bit as the dollar strengthened, but not dramatic. So again, we'll have to keep an eye on the impact of the strengthening of the dollar, impact on dollar-denominated commodities. So I hope that all helps. Okay, I'm going to come back to ETFs in a minute. Let me quickly go through some of our other trends and strategies in a second, and then again, we'll come back to ETFs after that. So just a quick follow-up in terms of strategies for making money trading and the fallout from the Jackson Hole Symposium. Again, as you heard, it was, generally a hawkish tone, but nothing new. 2% inflation target, higher for longer. They're open to raising rates further. They're going to be data dependent. So again, no surprises. The same thing they've been telling us for a long time. And as we commented last week in our Don't Fall in the Jackson Hole weekly trading game plan, it's that's pretty much what we expected. So the market did react somewhat. We saw that negative reaction initially, and then a recovery pretty quickly. After Jay Powell's meeting. So, nothing really new. Some of the other Fed officials came out and talked, and some were more open to further rate hikes than others. And again, you get a distribution of hawkish versus dovish, and that's what their committee is about. And they'll debate that in the September meeting, and we'll see if they hold or if they go with a 25 basis point hike in September. Either way, in my humble opinion, I don't think it's a dramatic change. So I hope all of this helps you, make money trading in the upcoming week, as well as going forward. We've also been talking about, how to make money trading in August. So this is the last week of August. So you can hear our previous discussions about making money trading in August via the links in the notes, as well as on our BeachBum Trading YouTube channel, as well as trading the summer. So we've got how to trade the summer stock market doldrums. We've kind of seen, lower volumes, more chop in August in the past month or so. So again, you can hear those as well. And we'll look at the components. We talked about sector rotations, and we'll look at the technology components in our ETF spreadsheet. And then tomorrow, in addition to selecting our top swing trading stocks to watch, we'll also look at dividend paying stocks and ETFs, and we'll talk about option strategies again. With the summer being slow, somewhat slow, markets typically decline August, September. We can also use some option strategies and some dividend payers to generate income while we wait for additional swing trading opportunities to present themselves. So now we'll go back to the ETFs. I'll bring up our ETF spreadsheet. Just a quick reminder, if you'd like to have access to this ETF spreadsheet 24/7, you can get that access by joining our all access or VIP level of our Patreon. Again, we use our ETF spreadsheet. We talked about ETFs to trade, the various opportunities in the futures like gold, silver, natural gas, oil, etc., even sugar, the cane ETF. I also want to point out a couple that I've done additional research on. So we'll look at those first in the research tab. The first is one that Easy Mike has mentioned a couple times, is REMX. It's the VanEck Rare Earth Strategic Metals ETF. So if you want to play long on rare earth strategic metals, we already had REMX in our dividend payers Google sheet. So I put it in the research tab, and we'll see. We can look at that one real quickly in the research tab in our ETF. So as I identify or someone points out or asks for research on a new ETF, we put it in the research tab. I then look at the support and resistance levels. So by putting the symbol in there, it automatically picks up the current pricing from these Google functions. So I get the current high-low, the 52-week high-low, and then I manually go look at the FinBiz charts, identify the recent near-term support and resistance. That gives us a risk to reward profile. My target for risk reward is 2. So I'd like to see, a near term or, at least a 52-week low to high of, 2. And this doesn't currently offer that. You can see bottom to top. So if I take, the ultimate bottom, the ultimate top, it's got, good, very long-term risk reward. But, generally in the past year, it's, 1.5. Another thing I thought was interesting that you might like to see and benefit from is the composition of this rare earth strategic metal. So you can easily access um, the prospectus, the definition for any of these ETFs via the link in our Google Sheet, and then you can go to the holdings as well. So you see MP Materials, which is one we've been watching, looking to buy. You can see lithium, PLS. So again, you can identify the LAC. So those are some, another US-based lithium. So you can see the constituents of an ETF, and you see, these are Chinese. So that's one of the things I suspected is a lot of these are probably Chinese-based. So there's another Chinese base. So just be aware that, trading this particular ETF has quite a bit of exposure to China, and they are restricting their exports of rare earth materials, which we talked about gave a little bounce to MP. We'll be looking at that again tomorrow, but again, I would recommend looking at the constituents of an ETF and making sure that meets your risk reward profile as well. So I hope that helps. So the other one that I added in the research tab is SRS. Thomas Carbo, I believe, mentioned this one as another way to play real estate short. So we can see SRS as well. So you can see the risk reward on SRS. So again, a way to play real estate short. Another way to play real estate short. This is the ProShares Ultra Short Real Estate. You see the near-term risk-reward profile, isn't all that attractive. Again, 1.5. The 52-week only 1.7. Bottom to top. Again, I used a weekly chart, I believe, for this because it has some decay as it's a leveraged ETF. So again, the risk-reward profile of SRS, I didn't feel was as good as DRV. So if we go to our main tab and we go to real estate, we can see the various ETFs we have for trading real estate, long or short. So again, DRV has, a much better risk reward profile in the near term or the 52-week for shorting real estate. You can see this is a 3x bear. So we've got a long bull real estate DRN and a short real estate DRV, and we've got a couple others. We've got the sector spider, etc. So again, if you're looking to trade, real estate, here's one that's a mortgage backed. Again, I don't particularly like mortgage backed right now, but again, multiple ways to play real estate. Walter Lyons says he's been enjoying using our DRV DRN pair for weekly swings. So again, great ways to play short-term swing trades, day trades with various categories using the ETFs identified in our Google Sheet. So if anyone has another category you'd like to look at, I'll quickly spin through. But again, if anyone in the chat wants to look at a particular category, index, commodity, etc., we can do that. We'll talk about cannabis, MJ tomorrow. We've talked about China. We typically, Alan's saying he doesn't want to play anything in China. I would agree. We've stayed away from individual Chinese stocks and also Hong Kong for, it's been probably 2 years now. But we trade China long with yen, short with yang. You can see there's also several others you can choose if you want a different category. Internet, there's KWeb, CWeb, biotech. Again, we strictly just use these ETFs to trade China. Talked about silver and gold, so you can see the variety of ETFs we have for trading silver or gold, long or short. So again, you could day trade, short-term trade, silver and gold, like using GDXU. Long, also you can see dust is a short. Silver. And I prefer AGQ. You can short with ZSL. We've also got, there's miners, ETFs with the miners. So if you want to trade the miners, there's a miners one for gold, and this SILJ for silver. There's junior miners, JNUG. Welcome, Easy Mike. Glad to see you. He's at the beach. That's a great place to be. I'll probably be there later today too. So again, natural gas, cold and boil. Again, short-term trading. It's volatility, but in general, it's pretty range-bound right now. Oil, gush and drip, gush long, drip short, or UCO long, SCO short. Talked about sugar. We've got cane in here. So you can see where that is. We talked about the run-up in sugar. Treasuries, we've been talking, you can short-term trade, I believe Easy Mike and some others, shorting Treasury with TBT, you can long with TMF or TLT. Talked about that strategy for a while as well. Uranium. Utilities, we talked about this a week or so ago, that we're, again, looking for a seasonal bottom in utilities. And we like that UTSL as a way to swing long utilities. So I'm keeping an eye on. You can see how close it is to support. We'll see if it gets down to that support level, it holds. And then we'd be looking at a potential swing back in utilities. Again, you could trade these shorter term. We've got a short for utilities as well as several longs. Okay, so if anybody else in the chat, welcome. A mercy received. Glad to see you. A new member. Hopefully you're subscribed to our channel. Glad to see new members, and thank you for joining us. So if anyone has any other questions, if I missed your question previously, I apologize, and please throw it back up in the chat. I'll try to address it in the last couple minutes we have. In addition to subscribing to our channel, hopefully you'll also join us in our free Discord. We have a free BeachBum Trading Community Discord. We can continue these discussions, these chats 24/7 in our free Discord. And again, you can find a invite to our free Discord in the description box below. You can see I try to post the economic data as real time as possible in the Surf the Markets channel in our Discord. We also have a number of channels for discussing different styles of trading, different asset classes, different tools, etc. So again, I'd encourage any new people to also join our community in our Discord, get help from your fellow beach bum traders, and help out your fellow beach bum traders. That's trying to build a community of fellow beach bum traders, all helping each other make money trading, helping you all succeed in your trading career. That's why we're here. That's our goal. Thoughts on AI stocks? I've done a video a while ago on the AI stocks and the hype cycle in AI. I think it's titled, something related to, is the AI bubble about to burst? In general, and you can hear my thoughts about that in that video. More detailed thoughts about the AI hype cycle in that video as well. And we also talked about these ETFs that we have for playing that theme. You can kind of see where they're at. They're, high. It's still hyped. Obviously, NVIDIA, their earnings, their raising guidance spurred that further hype for a short period of time. But as we've heard from most of the other companies, they're not actually making money from AI. In fact, they're incurring cost. And possibly I can talk about that in more detail. Possibly once this hype cools down a little bit, we can start to look for some real opportunities who's actually going to be able to make money. Someone on one of the news shows brought up the Gartner hype cycle and talked about, is AI falling into the trough of disillusionment? And that is the next cycle. Once you pass peak hype, you fall in the trough of disillusionment. Everyone kind of throws it out, gives up until it bottoms, and then heads towards the plateau of productivity. So once the hype's down, we'll start to look for who's going to survive and who's going to actually grow along that plateau of productivity. And in different phases, you've got your picks and shovels like NVIDIA, you've got your services, and then you've got the benefits to enterprises, etc. from that. And again, maybe I'll have time to talk about that in more detail in the near future. I hope that all helps. Okay. I don't see any last minute questions. Again, if you have any further questions, comments, etc., also suggestions on how we can improve our weekly trading game plan videos, or any of our videos, or any of our tools, anything in our community, you can please put that in the comments to this video. You can also put it in our Discord. Just tag me, BeachBum Trading, all lowercase, no other characters, no numbers, etc. We also have a number of other communities, a Facebook group, a Reddit community, or you can contact us via any of our social media profiles. You can find links to all of our social media sites, as well as an invite to our Discord and etc. on the link section of our homepage. Our homepage is beachbumtrading.com, bum without the U. So again, any further questions you have, please put them in the comments or contact us in the Discord or via social media, and we'll try to respond as we are able. So we hope this all helps. We hope you like this content. We hope you'll help us continue to grow our BeachBum Trading community by sharing this with your fellow traders and friends. So again, we want to keep building the community, bringing in new fellow traders, and helping them succeed, make money trading, and succeed in their trading career. So again, we hope this all helps, and we hope you'll come back for part 2 of our weekly trading game plan for the week of August 28th through September 1st. Tomorrow, same bat time, same bat channel, 10 a.m. Eastern time, and we'll be selecting our top swing trading stocks to watch. We'll talk about dividend payers, our options strategies, etc. And again, additional strategies and trading ideas for making money trading the week of August 28th through September 1st. So thank you, everyone that joined us in the chat, and everyone that's watching after the fact, and have a great day.